Your data shows that deals, again, they're about 30% from a year ago, 535 billion overall. What's the catalyst? What kind of deals are driving this rise?
Well, it's interesting. We're seeing a little bit of a barbell here where we're seeing more mega deals, so deals more than $10 billion than in the last 12 months preceding. Actually, through April, we've had more mega deals than we've had at any point in a year-to-date period for the last decade. So we're seeing the desire for more transformation. There are the AI boosts to a lot of this, technology, recurring revenue bases.
All right, so we're mentioning AI. We've seen a lot of reporting that a lot of these AI companies, they actually don't want to go public. They don't want to enter the public markets because they're getting so much private equity money. So what portion of these companies that are driving these deals are in the AI space, or do those deals where they get money from private equity companies' investments, are you counting those in the deals?
I'm counting those as well.
Okay, so that's a big part of the catalyst.
That's a big part of the catalyst.
So AI is really just the catalyst.
Well, it's one of many catalysts. I think the general economic, their CEO confidence is picking up as well. So as business confidence picks up, there's a really strong correlation between business confidence and deal volume in general. So as the CEO confidence has picked up, as rate uncertainty is coming into focus, not that we're quite there yet, but as it comes into focus, it's bolstering the appetite to do more deals.
Yeah, we're showing some of the data right here. 64% of CEOs, according to your survey, haven't made a major acquisition in years. 60% plan to do so in the next 3 years. So speaking of acquisitions specifically, I know we're talking about deals overall. Looking at small caps, seen a lot of reporting that small caps are underperforming, and a lot of those names could be deal targets. In this environment, higher for longer, is that the direction that some of these deals are going in, with some of these small cap companies possibly looking to be acquired by larger companies?
I think that's definitely a direction of travel. I mean, if we look at private equity alone, in April, there were 4 take-privates that were each over $10 billion, so not exactly the small cap, but a trend of the take-privates that you're referencing. I also look at the desire to transform businesses, and do those small cap companies have technology, people, infrastructure that are required to help transform? Because I think most CEOs would say, in our survey, 82% of CEOs say that without some sort of disruption to their business model, they'll be obsolete in the next 10 years.
So it's not worth acquiring them right now, is what you're saying?
No, I think they're looking to acquire now to actually protect their core business and grow their core business through acquisition.
I want to ask you about valuations. That's obviously a key factor when it comes to M&A overall. We're in a higher for longer environment. We have no real clarity of when the Fed's going to cut. And a lot of companies in the public space have higher valuations than they did in previous years. What about in the private space? Give me a sense. How do valuations play a factor?
I think that's actually what's still holding a little bit of the private equity money on the sideline, is this desire for the bid and ask spread to start to narrow. So valuations are tempering a little bit of the expectation still on the overall rebound, though we're still seeing the sharp growth is what you